So there are reasons to be skeptical of the signal from the US yield curve because there are some distortions affecting it. So potentially unconventional monetary policy such as QE and forward guidance means that the long term of the curve is depressed and the hurdle for inversion is quite low. However, it's always risky to underplay the indication from such a reliable indicator of recession. So all recession have been preceded by a yield curve in the 12 or 18 months before the event. And this time might be actually the same. All that said, I think the best idea is actually to combine the signal from the yield curve with economic data, and at the moment we are really witnessing a mixed situation for US economic data. There's like a synchronized downturn for the manufacturing sector globally, and we have the threat from trade tensions. So all in all, I think there are reasons to be cautious. So markets are rightly concerned about trade tensions, as an escalation of trade tariffs is probably the single largest risk for the global economic outlook. So trade tariffs are likely to result in winners and losers. On the loser side, well, China is actually set to suffer the most, given that it's the main target of tariffs, and also open economies like the Eurozone stand to lose from disruption to trade flows and uncertainty about trade policies. As for the winners, there might be some countries, especially smaller Asian economies, that benefit from the reshuffling of supply chains, for instance, Vietnam. However, it's really important to keep in mind that the net effect from trade wars is negative. Trade wars mean inefficiencies, higher costs, given that supply chains are deeply integrated right now. And well, therefore, trade wars could really be the trigger for a recession in an environment of already slowing economy. So the renminbi depreciated quite sharply against the US dollar in early May, following the imposition of new tariffs by the US on Chinese goods. However, the threshold of 7 has held up, and recently the renminbi stabilized at around 6.9 against the US dollar. I think this threshold will hold going forward, given that Chinese policymakers are quite wary of excessive and abrupt depreciation in their currency. As a matter of fact, past episodes of abrupt and sharp renminbi depreciation led to episodes of financial instability and pressures towards capital outflows. Therefore, I think that for the time being, the Chinese policymakers will try to stick to this magic number for the renminbi dollar exchange rates. Going forward, though, an intensification of trade tensions between the US and China could really challenge this assumption.